everyone. I want to welcome you to our CID Insurance Programs webinar today called Understanding Nonprofit Exposures. My name is Anae Agostini. I'm CEO of CID Insurance Programs, and with us today is Michelle Belden, nonprofit underwriter, and our instructor today is going to be Kristen Hazard. We're very lucky to have her. She's super knowledgeable. She's Vice President of the Nonprofit Package Department of USLI. And last but not least is Jacob Cole, who's our marketing coordinator, and he makes sure that everything runs smoothly behind the scenes and handles all of our marketing. So let's talk about logistics. And we've got everyone's going to be muted but able to hear, but your voice is important to us. So please pose any questions that you have in the chat room at any time throughout the webinar, and we will go ahead and answer them as they come in. A short survey will pop up so after the webinar, and again, we really do appreciate your feedback. So I'm going to go ahead and do the webinar objectives so I could turn it over to Kristen. And today really is understanding the opportunity and current trends with nonprofits. You're going to learn about important coverages that are needed, and then how to better understand the application and how to obtain a timely quote. So without further ado, I'm going to turn it over to Kristen so she can teach the course.
Thank you, Anae, and thank you everyone who's joined us today. We really appreciate your time. We're very excited to talk about the nonprofit sector, and the goal is, as Anae was saying, is that this is a sort of a different sector. Not everybody handles it every day, and so there's some unique nuances that we want to make sure you're aware of. One thing for sure is that with nonprofits, there's a common misconception that it is a niche type segment, that it's small. Well, there's over 2.8 million not-for-profit entities in the United States. That's what we know of. It continues to grow year over year. It's very, very stable and has done quite well even when there's been very bad economic times. As a matter of fact, during those poor economic times is typically when they're needed and when they respond to that community need. So that's something to keep in mind, that working on nonprofit is a stable industry segment. It's not subject to things like restaurants, manufacturing might be. Additionally, most nonprofits tend to be small. About 66% of them have revenues less than $500,000. And while that's the case, they're still pretty complex and have some unique exposures. And the interesting thing about that is that I think you may, as you come into nonprofit accounts, and you may not immediately recognize them, is that they are probably placed somewhere where they don't belong. They may be written as like an office exposure, and there's severe limitations that they need to be concerned about, but we can help you address. So that's just something important to keep in mind. There's a lot that you can do to improve the coverage that they'll have. Current trends that we're seeing right now, there's definitely a resurgence in fundraising and event activities. So you figure most not-for-profits, they're not producing a product. They have to make their money somehow. So typically that's through campaigns and special events. And now we're seeing that increase across the board. And with that, there's even a greater need for insurance, because we're seeing more of the venues that they go to wanting to see that coverage in place. Additionally, now that we are in another sort of economic downturn, there's a greater need in the communities for the nonprofit services, things that aren't being provided elsewhere. Social connection, of course, is important now, but community resources, there's food and housing insecurity, and of course, there's more attention towards development of the youth and mentoring and STEM programs and all of that, stuff that I would say schools don't have the resources to provide. So the nonprofit sector is who's really answering that call. These next three items, I would say, are really what's also driving some pressures within insurance markets to reduce the offering that's out there. So for one, some of you may have heard of the Child Victims Act. That was something that was passed in about 2018 going into 2019. And what that successfully did was gave an opportunity or a look-back window for individuals who suffered or were victims of abuse to now not be subject to those statutes of limitations in those specific states. So this, not that this is federal law, but many states adopted this Child Victims Act. And what that did was created a pretty significant tail for nonprofits and churches and the like that are operating. And probably the most egregious example of that would be Boy Scouts of America. At that time, the settlement fund for them grew to $2.7 billion because they had now thousands of claimants because they were absolutely allowed now to bring action against them. So while that's an extreme example, it does show you that insurance companies paid attention and definitely got scared and said maybe we shouldn't be as aggressive in writing this coverage line. And similarly, any funding organization started to realize this is an issue that they want to make sure a nonprofit has addressed before giving money. So that's one big thing that has changed the marketplace. There are less carriers now that are writing high limits of abuse and molestation. Social inflation, also nuclear verdicts have sort of changed the game. They've really increased the potential size of settlements. And what that has done is a lot, again, insurance markets look at that and say, we can't sustainably write very large limits, umbrella and excess for these organizations, and not just nonprofits. This affects all sorts of different companies and businesses. But with that has now reduced capacity. So you're seeing less often the ability to get higher limits. So just something to be aware of. And then, of course, the reverse is that nonprofits are really being required by a lot of different entities to have these different things in place. They want to see schools who are allowing nonprofits to use their space. They want to see very high limits in place. They want to see abuse and molestation in place. They want to see all these specialized coverages, contracts, funding sources, landlords. All of that has now created a much greater need, and we're seeing a much greater flow of business because of it. So how can CID help? Well, one, there's stability. There's access to my company, USLI, and we've been writing not-for-profits for over 30 years. And we've been able to do that in a way that we can do this sustainably. We have a very broad appetite addressing over 500 classes of not-for-profit business, both small and large. And we give multiple quoting options. And this first one is one that I know you've heard a lot about, but we like to promote strongly, is the instant quote option, calling 877-969-7539. That will get you in touch with an underwriter, much like myself, and you could describe the risk. Whether or not you have a great familiarity with all of the ins and outs of it, we can help coach and advise what we need in order to quote, and most times we're able to quote right over the phone. You also have an opportunity to quote online, or you can email Michelle at cidinsurance.com, and she'll help make sure to get that coverage placed. We look at 10 major segments of nonprofit, and this isn't meant to be an end-all be-all list, but it's just kind of a major segments that we see. So we see organizations participating in the arts, we see business associations, charities, condo and homeowners, social clubs, fraternal clubs, churches and houses of worship, organizations providing services like food service, housing, counseling, and then, of course, event liability and sports organizations, and finally, that umbrella and excess coverage. So we're going to go in a deeper dive and sort of talk about the lines of coverage and why they're important. And obviously, not every nonprofit is going to need exactly this, but this should apply generally to most. So first line of coverage, you're all probably very familiar with general liability. This is most regularly what we're being asked to place. It's required by most contracts and grant and funding organizations. I would say most commonly, 1 mil, 2 mil limit usually does carry the day, but we do offer lower limits. But I would say that would definitely protect them in most instances. One thing that I like to point out and make sure that you're aware of, so nonprofits may be different from, let's just say, a Main Street market or mercantile sort of shop. They are going to have operations all over the place. A lot of times, many nonprofits don't even own or lease a building. So when placing coverage, one thing you want to pay attention to is that you have broad location coverage, or more specifically, there isn't a premises restriction. USLI, for example, it's very few instances where we are going to restrict coverage. And what you would have to look for in the list of endorsements is it's the L685, and that would be the premises limitation endorsement. If that's in place, there's probably some off-premise activity we're concerned about. But generally, again, most of the time, we want to offer a broad location coverage because we recognize most nonprofits are going to operate wherever they can operate. So that's, again, important that you have a specialty carrier for that. Higher non-owned auto. I would say every nonprofit has this exposure. What's usually misunderstood about higher non-owned auto is that this is a third-party coverage and it is not for physical damage. Higher non-owned auto is really covering the liability out of someone driving on behalf, a volunteer or an employee driving on behalf of the organization. So maybe they are running to the bank and dropping off some new donations. Maybe they're driving someone to a doctor's appointment, but they're using their own personal auto. That's where this would come into play. And if they maybe injure somebody on the road, another car with people in it, or hitting someone in a crosswalk, that's the liability that this is addressing. That injury to that person in the crosswalk or those other passengers in another car is not covering our employee or volunteer who's driving, and it's not covering that employee or volunteer's car. So that's the typical placement for higher non-owned auto. Event liability, as we mentioned before, super critical because every nonprofit holds events. I highly recommend looking for coverage where that is either automatically contemplated or can be contemplated within the general liability coverage. And the reason why is because what will happen, undoubtedly, is you get coverage in place, and then months down the road, the nonprofit decides to hold a special event. And then everything is happening at breakneck pace, and they need the coverage within 15 minutes because they're at the venue and they can't get in. So I'm sure you're all familiar with that phone call at like 4:30 on Friday. So if you can get your annual coverage in place ahead of time, get blanket coverage in effect, most of the time you're not going to have to worry about that phone call. You can just point to that annual policy and say, there is coverage for your special events. So that kind of comes to how it's typically handled. There's really kind of two ways. One would be standalone coverage. And sometimes that's very appropriate. Maybe for a larger, more unique event. I know USLI, on a standalone basis, we can write an event up to 20,000 attendees. So that's pretty large. Now, when we're handling on a blanket basis, it's a bit more limited in the sense that we'll do blanket coverage for all events up to 2,500 attendees, which when you think in the case of a small not-for-profit, that's probably most of what they're going to be doing. But it's in one step, yes, two questions, and you can add that coverage onto the policy. So again, that to me is the preferred route because it reduces gaps in the long run. It also doesn't make you have to fill out an application every single time they need event coverage. Liquor liability is the next line of coverage. It's also pretty common to not-for-profits. That coverage is available on a host or a commercial basis. Now, host coverage is different from commercial, and it's a common question we get. Host really just means that this organization, this not-for-profit, is not in the business of selling, manufacturing, distributing the liquor. So take, for example, a Chamber of Commerce. If they have a meeting and they just have wine and beer available to anybody attending the meeting, that's a host exposure because the organization's not responsible. They are not charging for that beer or wine. Now, if that Chamber of Commerce has a special event and they're hosting a booth where they're selling the beer to people coming up, now they've gone into entering the business of selling alcohol, and that becomes a commercial exposure. Now, again, we can address that exposure, whether it's on a host basis or on a commercial liquor basis. The commercial liquor basis will just maybe drive an additional $100 charge. But that's kind of the main distinction is, are they in the business? And the last thing I'd say about that is that with nonprofits that can be unique in the sense that they may sell tickets to the event, and for that ticket, you may get 2 free drinks. That now kind of crosses them also over into that commercial liability exposure for liquor. So again, we're able to do that on a blanket basis with USLI. So moving on, we have some specialized coverage. We talked a little bit about abuse and molestation. That is really important for any not-for-profit who's working with a vulnerable sort of population. So I would argue that's probably most not-for-profits. If they're providing counseling to abused victims, if they're providing, just after-school programs for youth, perhaps they're working with the elderly or individuals who are developmentally disabled. These are people who don't typically have a strong voice for themselves. And unfortunately, those are the folks that typically are victims of this. So it's very important a not-for-profit protects themselves from these allegations so that they can continue to operate long-term. And obviously, no organization intends for these things to happen, but they unfortunately can. So it's becoming more and more important these days, given that, as I was mentioning earlier, there's now a longer tail that they are responsible for. They can be responsible for activities that took place 50 years ago now at this point. So it's very important that they have the coverage in place, and that they need to look at the limits that they have in place. Now, oftentimes, a sublimit will be completely adequate, but I would say any organization maybe working with youth maybe wants up to $1 million limit. Proper risk and loss control is very important, and we can give you some details on what we find to be important. But if you really boil it down, they need to have good supervisory policies in place. So that means making sure that there's never a situation where there's one-on-one activity with a youth, for example, off-site where there's no one there to supervise. You want to make sure that they have written policies in place. Why they need to be written? Well, it needs to be something that somebody can reference and refer to and sign off that they've reviewed them. And there needs to be regular review. Without those policies, it's kind of like the Wild West, and then people can plead ignorance, but you really need to make sure that they're aware not only of what's not appropriate, but also what they need to do when they find anything that has taken place that is not appropriate. Report it to the police, making sure that then they can start to take care of the individual who's unfortunately maybe suffered in this instance. So there's a lot there, but it's very important that coverage is in place. It's very important that you work with an insurance company that offers the resources to help you put the right measures in place. Moving along, social service professional, or E&O, is usually also a very important piece of the puzzle, especially if they're providing a professional service. It's very important to have the professional liability and the general liability together because these are covering bodily injury that arise out of either the premises or potentially that professional service. And sometimes it can be very confusing as to which instance caused the injury. So if you have those coverages with two separate carriers, we all know that they're going to point fingers at one another and say that the other entity is responsible for covering it. Put it all together with one carrier, there's no question it's going to be covered. So this is really for their exposure when maybe they're doing a counseling service, they're providing food, they're providing housing. All of these things are very important services that they want to make sure that they're covered for their interest in that professional service. And what it isn't is medical malpractice coverage. Sometimes there's some confusion there. That is a whole other line, a whole other pricing, and this is really meant for non-medical services, this social service professional. Finally, coming on to umbrella, this is really, as we were talking about earlier, driven by these larger verdicts. Most contracts these days do require a $1 million of excess or umbrella, or that $2 million you see pretty often. We can, again, help with that, whether it's over our own coverage or another carrier. And just be reminded that, this is less and less available these days. So it's important to make sure that you have access. And then property is an area that's usually pretty well understood. Depending upon a not-for-profit, they may or may not actually have property exposures, but they're typically going to be looking for building coverage or contents. They may have equipment that is in transit, so you're going to want to look for inland marine coverage in those instances. But in these days and age, I probably don't need to tell you, there's a lot of restructuring of what carriers are doing with regards to property. There's been changes because of climate change, because of just the economic pressures. There's now increased cost of construction. So many buildings their valuation is outdated and it needs to be updated. Many values are too low today that where there are a loss, it's not adequate to rebuild the building. So something worth looking at. Also, there's greater concerns these days now with wind and hail and brush fire. All in all, it's just very important to pay attention to the property market. Directors and officers, kind of the final coverage line we'll talk about here. This is really addressing the wrongful acts of the board and the decisions that they're making. Things to really look for while you're putting this coverage into place is, volunteers, they should be defined as insured. If the coverage form is not broad enough to do that, it's not good enough for a not-for-profit. You want a broad insuring agreement. So that's really defining what the D&O is and isn't. For example, we are defining the wrongful acts of the directors and officers, and then very limited in the sense of what's excluded. So it's very important to make sure that it's not just an endorsement to a GL policy, that it is actually a form and it has its own limit. Also, other important coverage features, you want to look for duty to defend wording. This really puts the responsibility on the insurance carrier as opposed to the not-for-profit that maybe has to then go mount their own defense and then ask for reimbursement. You want a policy that will provide that defense right out of the gate and pay for it. And so, other things that we point out, our coverage form is really driven to help the individual directors and officers, which obviously are the decision makers who are putting it in place. So we have $1 million Side A coverage, and in conjunction with this lifetime occurrence reporting provision, I'd like to cover the two of them together. With the Side A coverage, what that really represents is that if an individual is named as an individual in a claim, and you have the worst case scenario, which is that the nonprofit is out of money, the insurance policy has been exhausted, limits have been exhausted. It's an extremely large claim, but there's still an action against that individual director or officer. Our policy will provide an additional $1 million limit for that individual, and that's included for no additional charge. So that way there is the assured protection. They will be covered in the event of the worst day possible. We have the lifetime occurrence reporting provision, which protects them if the future board were to go bare, and it will still cover that individual for that individual's decisions they may well on the board. It won't cover the entity if there's no longer coverage in place, but it will still cover that individual. So it's like a lifetime tail. And EPL, I'll jump to that real quick because that's also a poorly understood area. Typically nonprofits don't have a lot of employees. They may not have any, but there are a lot of claims that we see that fit that employment practices side. So what you're getting with that probably most importantly is the third-party discrimination or harassment, and that would address if any third party that they're interacting with, any third party, alleges that they discriminated or harassed them, this would respond. So it's very important, again, that whatever the case may be, that there's a very broad definition of what's covered and what isn't. So real quick, we have a couple case studies. You think of like a typical chamber of commerce. Every town has a chamber of commerce. They may have a lease space. They may have some members who are on the board. And typically a chamber of commerce is going to host events. So for our example, this one is hosting a luncheon, an Easter egg hunt, a 4th of July event, a workshop, and a local book fair. And they're really trying to get all of their coverages for the board, for the general liability, for their events, all done under $2,000. So what we would offer were we to review this risk, we'd give a general liability, we'd add on the higher non-owned auto, we would give them blanket additional insured coverage, maybe some business personal property, and that blanket special events. And in this instance, maybe they're selling liquor, so we'll add on the commercial liquor and the D&O. So this is the kind of quote that you would receive from us. It's the second page. And so you're going to see in this first top portion, the property we're covering. And so there's all the little additional property coverage grants there. And then you're going to see the liability coverage, which will address the different parts that I just talked about. So you can see broken out higher non-owned auto, blanket coverage, the blanket liquor coverage, the additional insured, and then that premises coverage for the chamber itself. So that's all addressed in this middle section. And then finally, you'll see the breakout and the pricing that goes along with the directors and officers in EPL. So all told, that annual coverage for events, the hired non-owned auto, premises liability, D&O, and EPL would all come up to $1,654. And that's with the full options for defense outside, really the Cadillac of coverage in that instance. If you took let's say another organization's common in the nonprofit world, this could be a youth organization with some counseling. Maybe these are disadvantaged youth. Maybe these are kids with problems attending class on time, some truancy programs. We see a lot of these now after school programs. And so this outreach organization, they've got two counselors. They have 20 volunteer mentors that are helping with these kids. And the program is after school and on the weekend. And they're using about 1,000 square feet of the cafeteria. And again, their goal, $2,000. So what we would offer would be broad coverage from the general liability, the business personal property. That blanket additional insured is pretty standard for us. We're giving them that E&O, abuse and molestation, and then that D&O with EPL. And maybe in this case, they're looking for shared limits. We could do that as well. So again, the structure of the second page, which is really going to outline your coverage and pricing, is going to go over that you have business personal property. The liability is going to be in the middle section, and it'll show that the counseling general liability is in play. So that's for like that's the square footage of the cafeteria you're using. The E&O portion right there, it's about $150 for two of the counselors. You'll notice that the mentors, they don't have a professional liability charge. That's going to come in play in other areas. So the youth center, where that's for those youth after school programs, abuse and molestation. Here, it's being included for no additional premium. This is because it'd be offered at a 100, 200 sublimit. Were we to increase to $1 million, you would probably see that charge be at $450, but it is available. And then the blanket additional insured for $100. So all told, all of that coverage, E&O, abuse and molestation, GL, blanket additional insured, it's $500. And then adding in the directors and officers and property back into the puzzle, it's $1,578 for an after-school youth program with mentoring. So it's very easy to help get a lot of this coverage in place for an inexpensive amount. So how do you find more? Well, there's one really great resource we like to point out, and we'll go over some other ones as well. But Cause IQ is going to show you the registered nonprofits in any area you select or across the entire country. That data that if you go to that website, you can find it. We sorted by any type of not-for-profit, the size or where it's located. And from that, you can actually build a leads list because the tax form 990 is going to be linked. So let's do a quick example. Let's say you are interested in targeting sports leagues. You really are into softball and you want to target the sports leagues right in San Diego. If you go to Cause IQ, you'll find there's 537 sports leagues, and of that, there's 148 baseball or softball leagues. So click on that, and that's going to take you to the list of every single one, that 148. So I just took a snip so you could see just a select portion of that. And so that'll show you the revenue size. It's going to show you that they're a 501c3. And then if you click on Tier Canyon Girls Softball, you're going to find their financials. That tells you a lot about the organization. It's also going to give you the address. It's going to tell you where their website is, their phone number. It's going to tell you when the fiscal year ends, so you can kind of have a clue about when they're going to be putting insurance in place. And so it's a lot of great information all at your fingertips. So I highly recommend go to, I'll put it up here again, causeiq.com. Play around and find how many nonprofits are in your area. There's other resources too, GuideStar, that'll take you to not-for-profits, churchangel211.org. You can use Google, or if you have connections at the local school district, people who are on the board, who you can talk to them about being an insurance provider for anybody using those facilities. And I would say once you've got them established on your list, all you have to do is get some basic underwriting information, and you can call Instant Quote and get a quote within 5 minutes. So I know we're running out of time, but just a couple more slides here. There are some upcoming trends that you should be aware of. First of all, with back to school, we see a lot of booster clubs, PTAs, and homeschool support and tutoring. All of that usually is working with the school, and they need to get coverage in place before the school year. Be aware for sports organizations, like I was just talking about that softball example, there was a carrier who stopped offering abuse and molestation for youth sports. CID and USLI, we can help. Institutional classes of business. Another carrier has recently sent non-renewals to all of those risks: churches, museums, arts, and theaters. We can help. And finally, umbrella. We can easily offer excess limits, whether it's over ourselves or another carrier. Kind of in closing, you can easily get a quote in multiple ways. If you try Instant Quote, which I highly recommend, you can get this quote over the phone. And you don't need an application. You just need to know some basic information. Just know what the description of operations are. Usually square footage will help. And you can get a quote. So you just dial that number, 877-969-7539, and you're going to be connected to an underwriter. And it's more than 45 now, but you'll get connected to an actual underwriter who talks the risk through with you. And what they're going to do is they're going to quote it for you. And then once you have the quote, you'll see listed just what you need to bind. That's going to be on the quote and detailed under prior to binding. You'll also see what you'll need to do within 21 days. And you'll also find an area of underwriting notes, which will typically tell you how to get some pricing relief. And then after the call, you can expect to receive a copy of that quote with some pre-filled applications, so you don't even have to get the application completed, and just verify all that information is correct. And then when you're ready to bind, you send that to Michelle Belden. And just to make you aware, just a typical example of what we see, that I get calls all the time for different types of nonprofits. One was a kitten rescue. One was an after-school program. Churches, all of the time, we see a lot of these different risks. So don't worry so much about what it is. Just go ahead and call in and say that you need insurance for a nonprofit. So with that, I'm going to turn it back over to Anae.
Hi, Kristen. Great job. There is one question that came in. How do these policies differ when they are only in one state versus multiple states?
That's a great question. I kind of have two answers for that. If you have an organization that is in one state, their physical location is in, let's say, California, but they happen to travel and maybe they're doing performances or like if it's that softball league, maybe they have tournaments in other states. If it's incidental and they're operating in other states from time to time, we really don't do anything because we do not have any sort of location restrictions that will keep them from operating in other states. If they have multiple, let's say, physical locations in multiple states, so maybe they have an office in California, an office in Nevada, an office in Illinois. Unfortunately, the way with our filings and the way our products are structured, we would have to write a separate policy for each one of those states and their locations. It's just because we can't use multiple state forms on one policy. It's just more like almost like logistics, if you will. But we could still review the risk. We would just have to write it on multiple policies if they had physical locations in multiple states.
Perfect. Thank you for answering that. And again, thank you for doing the webinar today. It was really good information. So as Kristen mentioned, Michelle is your underwriter for nonprofit. So please reach out to her. Her information is on the screen right now. I strongly recommend using the 800 number to get your quotes, as Kristen suggested as well, because it's just so efficient. It doesn't require an application, and you can get a quote within 5 minutes. So in addition, make sure that you all visit our website, CIDinsurance.com, and that you'll find lots of marketing tools, templates for use with your business insurance proposals, and other webinars that you can watch that are recorded, and then you can see what our upcoming webinars are as well, so you can register for them. So again, I want to thank you all for joining us today, and please send your submissions to submissions at CIDinsurance.com. Have a great day.